Hey guys, Coach Julian here. In this video, I'm going to cover BCE. Is it a buy? Is it a hold? Is it a sell? All right, let's get right to it. Yikes. Look at that stock, eh? 1 year, 3 years, 5 years. Let's take a look at the returns. 1 year, minus 18%, 3 years, minus 11%, 5 years. Wow, 1.31%. And these are total returns, meaning that it includes dividends. Ouch. The revenues are flat. This is an industry that is in the maturity stage. Doesn't seem to be any growth, and that's probably why the market is not very attracted by the stock. I mean, they're making money, net income of almost $2 billion. The problem is with the net income, if you look at the tendency in the last quarter or so, it's been going down. I mean, they're still generating $2 billion, but in comparison with previous quarters, the tendency here is declining. So their margins are suffering. Revenues flat, net income declining. It's heavy in assets. Obviously, you can see the shareholders' equity declining as well. That's tied to net income. So as net income deteriorates, so will shareholders' equity. Cash flow from operations is pretty stable, slightly declining. You're going to say, well, it pays dividends. Yeah, well, it pays dividends, but you're going to buy the stock just to see the share price go down. So it's nice to have dividends, but if you need to sell the stock, you're going to sell it at a loss. Maybe it's well priced. Based on this here, the P ratio is pretty high. You can see the average is 20.7. It's sitting at 23.11. Maximum over 5 years is 24, so it's in the high range, the P ratio. So despite the price being very low, the P ratio is pretty high. I mean, Y Charts gives it a nice attractive rating. I'd be concerned. My fear, if you ask my opinion, and I say, Julian, what would you do? And again, seek professional advice and or do your own research. I think there's better things out there, stuff with more upside compared to BCE. If you have it and you're collecting the dividend, you don't need the money. Okay, maybe you can sleep on it for some years. But if I'd buy this, I'd be concerned about the continuing deterioration of the share price and the fact that the revenue is just a straight line and there's no growth. Industry in the maturity stage. If there's a new technology that comes out there, a disruptor technology, like, I don't know, like a Starlink that comes out there and you have satellite internet and you no longer need to get data from fiber optics and you take it from satellite, this industry will be affected for sure. There's also the rules, CRTC rules that could change and introduce more competition. There's those factors also that are a concern for me. So I wouldn't touch it. Thanks for the question, but I think there's better things out there. There's better value. To me, it's a so what stock. I wouldn't buy any personally. You know, guys, always be careful with the dividend yield. You know, be careful. Stuff that looks very high, if it's too good to be true, it probably is. So be careful with stocks that promise or that say that they're going to give you a nice dividend. And the case of this one is, you know, you're going to buy the stock, you're going to collect the dividend, great, but chances that this share price is going to continue to deteriorate. That's my take on it, guys. Take it or leave it. Do your own research and or talk to a professional before you buy any kind of investment. If you like the video, give it a nice thumbs up. Sign up to my channel because I got more stuff coming your way. And thanks for watching today, and we'll see you real soon.